Hey guys, what's up? It's Natasha Varela, otherwise known as the Moneyista, tax strategist, real estate investor. You're a tax expert, right? 20 years in audit, accounting, and tax, 13 in the large business and international division of the IRS. So I want to talk about S Corps and S Corp revocation. So a lot of people prematurely designate S Corp status. So you have to form your LLC first, right? An LLC is a business designation. And then you designate to be treated as an S Corp, okay, by filing Form 2553, all right? And so one of the caveats of designating S Corp status is that you as the owner have to pay yourself a reasonable salary. If you have an S Corp and you don't pay yourself a salary as the owner, that is a red flag. Why? Because LLCs and other entities outside of S Corps and C Corps have to pay self-employment tax. And a lot of people designate S Corp so that they can avoid self-employment tax. The tee is that you have to now put yourself on payroll and pay employer taxes and have your withholdings, right? Now, your employer taxes are tax deductible, so that's a good thing. However, a lot of times people don't know what salary to pay themselves, right? Because it has to be reasonable, okay? And so, what is a reasonable salary? A salary that's comparable to a similar or same company with similar or same operations with similar or same sales. Okay, and I talked about how you can check, the benchmarks by going to bizstats.com. Now, what happens if you can't afford to pay yourself a reasonable salary, you're not doing too well, and you have already designated S Corp status? What can happen is you have to revoke your S Corp status, right? And the S Corp revocation is simply sending a statement, right, to your IRS processing center where you send your return, revoking S Corp status for your entity, right? And that includes the entity name, the shareholder name, how many shares, which is usually 100%, 50% if you're married, each person of the S Corp you have, the date of revocation, things like that. There's a whole list on the IRS website. I could read them to you, but you can just go there and detail what goes into the actual revocation statement. So now, here's what also happens. Once you revoke your S Corp status, the entity is prohibited from re-electing S Corp status for 5 years, starting the year after you revoke S Corp status, okay? So if you revoke S Corp status in 2023, 5 years starting 2024, you cannot re-elect S Corp status, okay? So I want people to know that before they hurry up and designate S Corp status so they can pay themselves a salary. What is a magic number to pay yourself? Once again, everybody's number is different. You can use bizstats.com, bizstats.com. Plug in, choose S Corp as the entity, drill down to your industry, plug in your sales, and you can see the benchmarks that are used, the percentage of sales that owner's compensation should be, and other benchmarks, advertising, salaries and wages. It's a good tool. So I just wanted to give you guys a heads up about S Corp status and electing it a little too early, and what can happen if you have to revoke it. And you will have to wait another 5 years from the year after you revoke S Corp status. Also, if you don't revoke S Corp status and you're audited, the IRS can revoke S Corp status, and you'll end up owing self-employment taxes, right, for the years that you were deemed to not be an S Corp because you didn't have owner's compensation, because that is one of the main characteristics. If you are a student in the Money Masters Academy Tax Strategies Mastermind, we go through exactly what your benchmarks are in visual form, and also audit prevention measures. Go ahead and click the link in the bio to join the next live training. I hope to see you guys there. See you later.